Yes, my friend, you definitely read the title of this video correctly. I do think, based on the charts I'm going to show you today, there is going to be a major rally coming here for Bitcoin and altcoins in the short term. Now, if you're asking yourself,
short term, this idiot's probably going to tell me 12 years or something crazy.
Then first of all, I get it. Most people on YouTube here talk about short term or time frames in this very long period, either tomorrow or the next 24 years. Now, I don't know exact dates, unfortunately, but you will quickly be able to tell that something is brewing with charts that I'm going to mention in just a second. A lot of people are talking about this chart, though. This is the looming death cross, where the 50-day moving average is going to go beneath the 200-day moving average. Now, as inherently bad as the death cross sounds like, and as much as you wouldn't want to walk down that pathway, I think that there is a little leprechaun with a pot of gold towards the very end of it that, as you'll soon see here, has shown time and time again on even this chart. All I ask is if you leave the video with more information than you started with, to help support all I do with a like down there, make sure you are subscribed and let's begin.
Death cross is a good thing. All right, dude, let's see how it goes. I better hit that like button, make sure I am subscribed. I'd love to see you explain that, man.
All right, I'll try my absolute best in explaining how this works. So a death cross comes when a shorter term moving average, in this case, the yellow line here, which is the 50-day, moves beneath a longer term moving average. In this case, it's 200 days. Of course, when these converge and are coming in, that's a sign of somewhat of a weakness because, when the shorter term price is coming closer to the average of the last 200 days, again, something is slowing down. It could also form into a much bigger and better picture. Not always, though. And so you're sitting there and you're freaking out because you're going, Kyron, death cross can't obviously come around too often if everyone's freaking out, right? It's got to mean price is going to be pretty volatile here. You'd be right, okay? It doesn't sound good, but you'd be wrong because honestly, I'm kind of secretly hoping it happens here. Don't tell the guy before, but the reason is because what happens after the death cross is usually something very, very good for Bitcoin's price. Now, how frequently does death cross come? Well, they actually happen quite a lot, at least in terms of a macro picture. The last time this happened was pretty recently, back in August of 2024, right here. The time before that was give or take 12 months prior, back here in about September of 2023. Now, the time before that was as far back as the conclusion of the 2021 cycle back in January of 2022. This confirmed the end of that bull run, right? Because price could not break above, for the life of it, that 200-day moving average. You can see here price just fell and fell and fell until something else happened, which is something very important, which is why I am bullish on the death cross. As crazy as that sounds, right? It's called the golden cross. It's the inverse of what causes the death cross, when the 50-day breaks above the 200-day moving average. This has caused the start of the bull run, or at least has signaled the start of the bull run way back here in 2023. You would have been able to buy Bitcoin for about $23,000 back then. What a discount that sounds like now. Anyway, fast forward all the way to the latest death cross from that point in time, right here. Of course, signaled quite a scary time. But again, what happened after that? A golden cross happened. And what happened from the $28,000 golden cross, or actually it was really $34,000 golden cross, we went all the way up until the next closest death cross here at $61,000. You would have pretty much doubled your money. Again, death cross happened here in August of last year, and then of course golden cross happened from about $67,000 all the way up to a magnificent $110,000. And so here we are again at the next death cross. Now, obviously, as you might be able to tell, I think what comes after the death cross is likely soon to be a golden cross. The thing is, if we look at timeframes here, when can we roughly expect all this to play out? Well, as you can see, this is back in September of 2023, so kind of that very first, death cross to golden cross situation. It took about 48 days. And if we go over here to the August of 2024 cross, we had about 78 days from each of them, okay? So it can last quite a bit of time. But what I want to really introduce you to here is two things. One, the fact that this is a lagging indicator. So it's a moving average. So it's not going to predict the future. And why is that important? Well, that's important because as far as we know, these may not even cross into a death cross to begin with. I'm going to actually give some reasons as to why I think it definitely will here in a moment. You can see actually as I speak, price is falling beneath the 200-day moving average, I think this would be good if it does. I know it sounds kind of like shoot yourself on the foot to save your whole body situation, but I do think that's what needs to happen here. But needless to say, it's lagging, so they may not ever actually cross. They may get close. If we have bullish price action here, we may see the 50-day move back above again and the 200-day staying the course. The second thing is that usually there is some sort of event on the day of the cross that causes the cross. It comes as a consequence, as lagging indicators would, from price action, maybe even a couple weeks or a month before that actually happens. So back in August, this was that death cross here. Yes, there was some volatility on the day and the days to come because obviously people recognize it's the death cross, but it actually really came from 12 days prior. We actually saw Bitcoin's price fall about 30% over about a whole entire week. And that's what really pulled the 50-day down to the 200-day, causing the death cross, so to speak. This happened again back over here in 2023 as well, where we saw a swing of about 16% in Bitcoin's price, 17%. And then, of course, some chop in between, but that really helped bring down the 50. And it was a very, very short one, 48 days before price went bullish again. And we saw that golden cross come. So yes, as I've been saying, this can most definitely happen here again, or it may not. Why I think it will happen here in the short term, and why I think at the current trajectory, we're roughly going to experience this death cross around mid-April. This is the 13th. It could be as far as the 21st. I mean, again, I'm not a fortune teller. I don't know for certain. But why I think there's a good chance it does is because we are seeing right now markets capitulate because of some pretty serious stuff happening between Canada and the US. We also do have a whole bunch of options expiring on Friday for Bitcoin, which is kind of the cherry on top for this news, which is we've had $120 billion liquidated from crypto in the past 60 minutes. So today, I think it was caused mainly from this.
The old relationship we had with the United States based on deepening integration of our economies and tight security and military cooperation is over.
Yeah, I mean, that's not good. We already have the reciprocal tariffs being announced on April 2nd, as I kind of point out over here. So we have like a time frame, roughly speaking, from when we can roughly expect the death cross. And probably it'll play out something more similar to this, where we have a pretty substantial dip before the actual death cross. But as far as after that, it's anyone's guess. Again, I'm just kind of anticipating eventually a golden cross to come based on some more things I want to mention. That could be 58 days, that could be 20 days, that could be a week, that might be 2 or 3 months. But again, that's probably bound to happen considering we respect some pretty important lines like these I want to share with you here. Some more moving averages, guys. I can't tell you how important moving averages are. They cut through the very volatile price action, they cut through the noise and allow us to see the cycle more clearly. If this goes bearish, I'm probably going to be more bearish. It's as simple as that, okay? But before I mention it, of course, as you should all know, guys, people are risk off right now. All right, they're hedging their risk in a gold, and that normally comes with a very volatile movement. You can see here, of course, the S&P is very, very volatile right now. Prices come down quite a lot recently. And also, one of the things people are looking at is this. It's global liquidity and its lead on Bitcoin. As I've said, it's too early to know for certain what kind of lead it has on Bitcoin. This is the 105-day lead. There's also a 72 or 75-day lead as well. This is the most accurate to recent price action, which means people have been fooled into believing that this was this move happening when in reality it could. I'm not saying it's definite, but it could be a fake out. And all that means, and why I'm trying to tie this in, is because that would time in very well here for some of the short-term volatility before eventually the golden cross comes at the right moment. I think it might be a nice recipe for success, a true blue sky moment, the leprechaun basically at the end of this sort of death cross road that could all tie in very well for a massive rally here, again, anytime after the death cross, if it happens. So what are these moving averages? Well, this is similar to before. This is looking at the 50, 100, and 200-day moving averages, but they're exponential, not simple. The sort of death and golden cross work on a simple moving average, okay, which is basically a nice even weight across recent price action, whereas exponential looks at weighting recent price action more over the older price action, so it's much more, volatile to the recent swings. But then I've got in this darker red line here, this is the 1-year simple moving average, so it's much more stable. And what this gives us is some pretty important notes as to the end and also the start of every single cycle. So the start of the cycle technically was when the three smaller moving averages, the 50, 100, and 200, went above the 1 year back here in April of 23, and it 100% concluded back over here in January of 2022. So it's pretty reliable, it's pretty accurate, and all I'm trying to say here is that unless these three moving averages fall beneath the 1 year, I am still in a bullish mindset. Now, you can call me crazy, but based on history, every single time that they move beneath the 1 year, it's confirmation the bear market's on. Apart from this, which was the pandemic, it really didn't bring them down for all that long, maybe a couple months before they went back up again. That is an exception, but that was a true black swan event, again, 1 in every 100-year situation. That could happen again, absolutely, but I'm definitely going to be off risking if that ever comes around again, just simply because the risk and reward at the point where we have the smaller moving averages beneath the 1 year is highly in favor towards the risk. The reward may potentially be, again, a situation where they break above and we have a larger bull run, but that's got to be a serious macro catastrophic event for these to break cycle patterns to fall beneath the 1 year. So I am always going to remain bullish as long as these moving averages show bullish signs, particularly how they work together and particularly how they work with relation to the 1 year moving average. This is the true big daddy here. You can see price always likes to respect the 1 year. That's a warning sign. So I'll talk more about warning signs in a moment, but there is more details here because, again, I do see something brewing, and that's what these moving averages also show me. These triangles are just trying to represent here when these bands flare out. So forget the 1 year for a second here. The 50, 100, and 200-day EMAs, when they flare out because price is highly volatile, right? Price is moving up or down, and therefore the moving averages start to span out based on their recent price action. So why this is important is because when they actually contract, the opposite happens. Price is usually coming into a point and things are contracting, condensing, because price has been very, very similar the last, let's just say 50, 100, and maybe even 200 days to where a huge swing is likely to happen. Now, the best way I can describe this is charts like this that pull in a whole bunch of different EMAs. This is about 26 EMAs right here. And all it is to show you very quickly is that when the EMAs condense based on price action, there's usually a very large move either up or down from there. Okay, so you can see it comes in together here, massive move. When they fan out, of course, price is volatile. Usually that makes it easier for price to break beneath some of the shorter term moving averages here. Again, when it condenses, you can see it really shoots up. The higher these fan, the more volatile it can become towards the top, all right? The less they can respect the smaller moving averages and so on, all right? So it's very important we have a look at these, and particularly on the longer time frame. So again, these are quite long time frames here. And you can see back in October of 2024, I've got a green arrow here because what happened was pretty interesting. It's happened actually a few times in history where the 50-day here moves beneath the 100-day moving average. It actually happened twice. It happened once here, went above and came back down again. It stayed beneath the 100-day, respected the 200-day, so it didn't break beneath the 200-day here, notably. And then when it went back above the 100-day, that caused this massive surge. Now, you're probably thinking to yourself, Kyron, very particular, isn't it? Are you sure you're right on this? Well, again, I spent the better half of today going and just trying to figure out if I could refute this. And surprisingly, I couldn't. This actually happened back here again at funnily enough, the same time that sort of golden cross situation happened all the way back over here. What I found was the same thing. The 50 went under the 100-day moving average. Okay, it went just beneath the 200. That's okay. And then it went back above the 100-day. Again, when it did that, that was the true signal here for a massive rally. Now, I want to take your attention again to not just, again, how this forms, because it looks like it forms based on the 50 breaking beneath the 100, respecting the 200, and when it breaks back above the 100, that starts things off. But I want to talk about here something to be very cautious of, okay, because there is this caution side of things. The good news is, as you can see right now, the 50 has broken beneath the 100. So as long as the 100-day remains above the 200-day, I do think we are on for, again, possibly a situation that causes price going up. I mean, this initial possible death cross that could come in the short term, again, short-term bearish, as we're seeing Bitcoin's price break down from the 200-day right now, could eventually lead to the end of that triangle I've got here, which could be a massive bullish signal if that is also paired again with a golden cross. And again, just to show you guys, I mean, we saw this before as well. This happened over here, roughly, okay? This was the 12th of October, 2024. If I zoom back over here, this also happened the 27th of October. So we had the signal back over here on this chart that things were, of course, bullish, and that golden cross came soon after to confirm it. As a matter of fact, if we even go back here into 2023, this golden cross signaled on the 29th of October. If we come back to this signal, this happened here on the 22nd of October. So this normally does come before, by the look of it, before the golden cross does come. But guys, like I said, we have to actually have the death cross come before the golden cross for that sort of upside potential. The cautionary side of things is not when the 50 or if the 50 goes beneath the 200, but it's if the 100 goes beneath the 200. That's a sign of concern. Okay, you can see here, this was actually at the first rally, sort of sell and may go away theory of the previous cycle when Bitcoin first hit $65,000. You can see the 50 went beneath the 200, but the 100 never did. Okay, so it's only when the 100 goes beneath the 200, we need to start being concerned. And you can see that didn't happen until over here, fully signaling that, of course, the bull market was likely over. And of course, price was in that same pattern as well. So that's mainly when it fails, all right? It fails when you see the 100 move beneath the 200. That's an immediate warning sign. And you'll likely see price at that same point as well, failing to break above the 200. The 200 will act as resistance, immediate bearish sentiment, immediate weakness, and definitely when you see price go beneath the 100 and sustain a close beneath it, that's a warning sign. Price likes to respect the 1 year moving average. So the further back we go, you can see as well, depending on where we actually are in momentum, kind of how price respects each level. Back over here in the dip between that first high and the second high of the cycle, price did close on the daily beneath the 1 year as a warning sign, but you can see here that the 100 never went beneath the 200. Okay, that's the important distinction I want to kind of point out from my observations, of course. You have a look at the weekly time frames and you have a look at the monthly time frames, and that tells a bit of a better picture. Weekly didn't close beneath. You can see it did close beneath here the 1 year on the weekly. So of course, the more macro you look in your time frames, the better the picture tells you, basically. So I do think using the weekly and monthly as a close will be a definite warning sign. And you can see here we've been doing quite a good job recently. All right, we've hit the blue deviation band here on the MVRV score. So of course, just like if you would have sold in the overheated warning signs of the MVRV, you're buying at a pretty good price. Okay, so obviously it would have been a good time to take some profits up here, as it would be, again, buying the fear, buying the dip down here. Non-financial advice, of course. We do have some more bullish signals as well. So again, this is just to say that we might have some short-term volatility, but there are macro lenses we can look at the cycle through that actually do show we do have more, room in the tank. Therefore, we could see a golden cross shortly after the death cross. We kind of have to see the death cross before the golden cross, right? So you can see here we've had a high and a higher high. Many people have seen this and thought it's the same as the previous cycle where we saw a high and a higher high. But of course, some of the deeper understandings of the cycle begin to show that it was actually a bit different back then. The MACD shows a high and a lower high, whereas here we've had a high and a higher high. Back here was a high and a lower high. Here it's a high and a higher high in those MVRV deviation bands. The only similarities is the RSI showing a high and a lower high, high and a lower high as well. So again, there are bullish and bearish kind of things to look at. One last thing as well is the pure multiple score. One of the main reasons why I think that we are not in the same situation as the previous cycle where we've had these two sort of double tops is because of where the pure multiple or where the minor revenue situation currently is. These dotted lines here kind of show the same time frames each cycle. And right now we've just had the 50-day moving average on the pure multiple go above the 200-day, which only happens right before the massive run-up in each cycle you can see here. So there's no way I see us being towards the end of this. That's just like us, for example, being here in the previous cycle, right? When in reality, the pure multiple says we're back over here. Okay, so we do have likely more in the tank. Again, that's just one lens to look at it through. There's many others, and I've try to do my best here on this channel to provide you guys with as many lenses, so to speak, to look at where we are in the cycle as I can, rather than price action. So that's my analysis on where we are right now, especially looking at the death cross and what may come in the short term. Let me know what you guys think. I do think the best is ahead of us, as I've said, but I could be wrong. So take care out there. Talk to you soon.